as Randy gives me the okay. Okay, we will call this workshop to order, and we can start with roll call.
Cox,
Here.
Griswold, here. Merker, Johnson,
Here.
Wasner,
Here.
Crampton.
Here.
Okay, we're here for the Plant Moran audit presentation, and we will go ahead and call them up and turn the floor over to them. Thanks for coming tonight.
Okay, great. Happy to be here. So I'm Bill Bricky with Plant Moran, the audit partner on your account. And with me today is Danielle Suvak, and we're here to talk about the audit for the year ended June 30, 2025. So first, just want to start and really thank Vicki and Barb and your entire team for all their help throughout the audit. We are here for several weeks. I always say kind of disrupting their normal jobs, and they just do a great job preparing for us and then helping us throughout the process. So when we talk about the audit, there's really three separate deliverables that we're going to touch on tonight. We have the financial statements, which is the large bound document. We have our end of audit letter, which talks about some required auditing communications and also some internal control related matters. And then finally, we have the graph presentation, which we passed out tonight, and we'll go through on screen in just a moment. So we have covered all of these documents in detail with management. And our goal tonight really is to hit some of the highlights for you and certainly address any questions that you might have related to the audit or the audit deliverables. So the first thing I always like to touch on is included in the large financial statements is our audit opinion on page 1 and 2. And that's really our main deliverable to you as your auditor. The financial statements themselves are the city's responsibility, and our responsibility is to give our opinion on the financial statement. And our opinion doesn't speak to whether the numbers are good numbers or bad numbers. We're just saying they're the right numbers. And the city did receive an unmodified opinion again in the current year, which essentially means the financial statements are in compliance with all the rules and regulations. And it's really the highest form of assurance that we can provide to you as your auditor. So I wasn't planning to spend a lot of time in the financial statements themselves. But again, we've summarized a lot of that information in the graphs, and then wanted to chat on the letter. So if we move to the letter, it's the stapled letter. It is like 5-6 pages. So this letter contains two items. There's really three sections to it. The first relates to any internal control related matters we need to discuss with you. The second section is just required communications related to the audit process. And then the third is just some legislative informational items. So if we start off on page 2, section 1, it's entitled Internal Control Related Matters Identified in the Audit. So we have a couple items here. So the expectations under the auditing standards when we come out to do an audit is we don't have to make any changes to the books and records. We are allowed to suggest journal entries, help communities close the books, but if we do that, we have to tell you what we did. And so the first audit finding we have here, audit adjustments, really relates to that fact. So as part of the audit, to prepare the financial statements, we help close the books and book things like the retiree healthcare liability, the pension related liability, really nothing related to the day-to-day operations of the city. So we're not changing the cash coming in or the cash coming out. It's really year-end accruals, and this is something we've historically done and continue to do. So that's the first bullet point there. The second item is also a recurring item and really speaks to the fact that ideally what we'd like to see in accounting process is segregation of duties, meaning one person doesn't do everything. Someone is always coming behind them and double checking everything. With the small makeup of the city, that's difficult to achieve. And so the finding we have here relates to the fact that one person can post transactions, reconcile books really with no secondary review. There are some compensating controls. I know there's other things that are done, but really there's no detective controls. So something wouldn't be identified if it was done right away. It potentially would be caught later during some reviews, but ideally we'd like to see the control strengthened there. And I know it's very difficult in a small community with limited resources, and that's why we always say, we're not saying you have to change this. You just have to be aware that this is a risk. And you can decide, whether you feel like the other controls you have offset the risks, or if you wanted to hire more people, throw additional resources at the accounting functions to make sure that one person wasn't able to do everything. I will point out that we did not find any issues related to this. We didn't find any any problems. Again, it's just we are required to communicate to you that this is a risk that you need to be aware of.
And you and I spoke on this. This is a
Yes.
this is a commonality with smaller communities everywhere, right? Not just us.
Correct. It's a very common thing,
Yeah.
and I always say it's a cost benefit analysis that you
Right.
have to figure out throughout the budget process. Do you want to put resources here,
Right.
or here, or here? And again, I just we are required to point it out. But,
Gotcha.
yep, exactly. The next 2 pages of the letter, which is section 2, just required communications under the audit. So happy to report that except for those 2 items we just talked about with the segregation of duties and the year-end adjusting entries, we did not have any additional audit findings, difficulties, any issues like that. If we had any, they'd be detailed here in this letter. But this letter, right as it stands right now, really is just very boilerplate and goes through some required items. And I wasn't going to spend much time there. So with that, I want to step away from the letter and really talk about some of the numbers. And so, what we've done in these graphs is really just, pull out various items from the financial statement themselves, summarizes them here, and we'll go through those. But overall, as we go through, I think the theme that you'll see is, the city was able to add dollars to fund balance this year. You were able to control your cost and really reduce your expenditures from what you had budgeted to help improve your fund balance. And we'll kind of see this here. So I think overall, what you'll see is, you do continue to have a good level of fund balance. And I think the challenge going forward is always really managing your capital projects and your infrastructure. In a small community, it's really difficult, to raise a lot of money quickly. And so you need to just make sure that you're monitoring your fund balance so that you can have planned capital expenditures and kind of avoid those surprises. So with that, I'm going to have Daniela jump in and go through some of the general fund operating results for the current year.
Here we go. So this first graph is kind of just demonstrating your general fund revenue for the year. So as Bill kind of alluded to, and as you can see here, the revenue increased by about $263,000 this year. Big drivers of that were property tax values increasing, and you got some non-recurring grant revenue that helped kind of increase overall revenue there. So it kind of breaks it down by categories, as you can see, and then below it will show year to year where you went up and down. And then on the next page, this shows total taxable value of properties. We've continued to see increases year over year. This year, there was a 3.2% increase, kind of showing a full recovery from the recession a couple years ago. So then this graph shows expenditures for the general fund for the year. So overall, there was about an $80,000 decrease, so pretty flat, but a little bit of a decrease, and that can be attributed to some staffing changes in various departments. Dispatch being outsourced is one of them, and then fire was down a little bit as well. And then again, below we'll kind of show the different categories and where it went kind of up and down. And then this slide here shows the city's required pension contributions. This comes from an actuary calculation. In the prior year, it was about $112,000. And this year was $134,000. And we like to just note that the city continues to make their required contributions for pension.
It's still underfunded though, right?
Yes.
Yes.
Yeah. I'll touch on the numbers.
Okay.
Now, why did that go up? Just interest, just cost?
How do we contribute?
Well,
Yeah, so some of it, so MERS, has that, you're in the Michigan Employee Retirement System, and every year the actuary does a calculation based on how much money you're earning in the market, how much service credits people have earned, how long people are living, so it's a pretty complex calculation,
Okay,
but there's a lot that goes into it. But yeah, you're provided the number from the actuary, and and again, in Michigan, you're required to put in at least what they say, and you've done that.
So So then this graph here shows the general fund balance. So the blue number on the left, that's going to show your expenses. And as Bill kind of said earlier, you did add approximately $250,000 to fund balance this year. But we do like to point out that a lot of that increase were due to one-time cost savings. So we wouldn't expect to continue to see the fund balance necessarily grow that much kind of year over year. This was kind of a one-year spending result. And if you look up at the top, it's kind of small, but it breaks down the fund balance. So you have non-spendable of 21,000, restricted of 69,000, assigned of 707,000, and unassigned of 756,000. So really that unassigned number is what's available for future kind of appropriations. All those other categories are kind of already committed or put away for separate purposes.
If I could just interrupt real quick for the record, note that Councilwoman Merkier is here now.
Sorry about being late.
It's okay, go ahead.
So on fund balance, oftentimes probably the number one question I get is, well, how much should we have? What's the right number? And I always say, well, there's no right number, but if you think about it, all fund balance is kind of like your savings account for future spending. And as Daniela kind of pointed out, when we look at the fund balance, to me, you really need to look at that unassigned number and the assigned number. So you have unassigned of $750,000, which means that's the money that's in there for future appropriations and for working capital and things like that. So oftentimes what we do is we look at that compared to your total expenditures and we come up with a percentage. So you have about 28% of your expenditures in your unassigned fund balance, which is pretty much where you want to be. Typically we say that number should be 20 to 30%, and it should never really go below 20. Because again, you need these funds for cash flow because you don't get all of your money on the first day of the year. You need some money to kind of adjust that. And then the remaining fund balance, so the assigned fund balance, that's money that's been set aside for future budgeted expenditures. A lot of that's capital plans and things like that. So when you look at the fund balance in total, certainly you're in a good position at just over 1.5 million. But again, we know with all the capital needs, 1.5 million doesn't go as far as it used to when it comes to roads and cars and capital and things like that. So that's why I mentioned earlier, it's important just to make sure that, when you spend fund balance, you're spending it on things that I'll say one-time non-operating costs. You never want to get in a situation where you're using fund balance to fund operations, because that's when you can get into some trouble there. So again, just keep that in mind as you're budgeting to use fund balance going forward.
That's kind of a rainy day fund.
Yes. Yep. Oftentimes that's what it's referred to as rainy day fund.
Right.
Want to spend just a minute and talk about the local road fund. So obviously I know the city's really committed to fixing the local roads, and your residents have passed a millage. And so we just kind of like to summarize in the current year what happened in the local road fund. And so the orange bar, this is the tax revenue that was collected in the current year from the residents. So there's just over $191,000 in tax revenue. You also got $106,000 from the state of Michigan from the gas and weight tax. And then there was $100,000 moved from the major street fund and shared with the local road fund to pump up that fund balance in there. And then there was $189,000 spent in the current year on local road projects. So you actually didn't spend all the money that came in the current year. So there was about $226,000 added to fund balance in the current year on the local road fund, ending the year with $895,000 in reserves in the local road fund to fund future projects. So I think there's a lot of plans in place, and again, there's close to $1 million in that fund for those projects going forward. The other significant fund that we always like to look at is water and sewer operations, for the city. And so we kind of have a 4-year trend here. And in the current year, you'll see, if you look at that orange bar on the right, you'll see it's just over $1 million, which is an increase of $138,000 over last year. I know you did pass along some water and sewer rate increases in 2025, and that really was the reason for that increase. I think we've seen over the last several years, really your volumes have been pretty stable. You haven't seen a lot of increases in your sales volume. It's really just that rate increase there. And then also the other significant thing here is we have the blue bar, which is expenses, which includes depreciation, and then the green bar, which is expenses that excludes depreciation. And I think we just show this to say that anytime your expenses are above the orange bar, that means you really need to review your rates because you're not really generating enough revenue to pay for the costs. But really, when I look at this, when I look at your water and sewer fund, you really don't have any significant capital reserves, but you are, have enough reserves to fund operations. So at the end of the year, the water and sewer fund had $121,000 of operating cash. So again, not significant, but certainly enough to be a sustainable fund. And then there was also $433,000 of unspent bond proceeds from the wastewater treatment plant bond that were still available at the end of the year. And my understanding is those are all being spent in 2026 to kind of complete that project. So again, with this fund, it's really just important to make sure you're always reviewing those rates and making sure that you're keeping up with the increased costs you're getting with, from Great Lakes Water Authority, wastewater treatment plant expenses, kind of all of the things that come along with operating the system.
Yeah, look like another rate increase next year.
I will let Vicky answer that, but I think a lot of it, will depend on what happens with, your water rate, the pass-through water rate you get from GLWA, and then again, the required, capital needs, going forward.
Chemicals have all gone up for the
Right.
treatment plant. I mean, they went up again this year, so, yeah.
Yeah. And then this graph, we just, kind of, like to put, kind of show, when it comes to water and sewer system, one of the most difficult attributes is keeping up with the infrastructure. Obviously, those pipes in the ground are very expensive, and the treatment plant. And so just to give you a little perspective here, the city has invested, about $12 million in actual historical cost of that system. And what happens from an accounting perspective is that system gets depreciated over the estimated useful life, and that's the $6.9 million there that's been kind of used up of that system. And so the net book value of this is just around $5 million. And so obviously you're going to continue to need to invest in this system. As you can see, as every year, you're kind of, using more, and it needs more and more replacement. And then as we mentioned earlier, there was a rate increase in the current year of $1.62. And based on the gallons sold, that generated about $95,000 of additional revenue into the system in the current year to cover those increased costs. I don't have a graph on this, but there was another significant item that happened in the current year that was very positive and really related to the retiree healthcare plan. And so the retiree healthcare liability for the city is quite substantial, and you made some benefit changes in the current year where you were able to change some of the insurance providers for the retirees. And what that did in the retiree healthcare plan is it really reduced the actuarial estimated liability by over $1.1 million. So when you look at the funding of the retiree healthcare plan, you ended the year at 53% funding, and last year you were at 31% funding. And the main reason for that increase is as those insurance costs go down, the projected future liability goes down because, again, the initial cost it is less. And in addition to that affecting that OPEB liability, it also frees up general fund dollars because the general fund actually pays for the cost of those retiree healthcare insurance premiums. So you'll see future savings for those, not just in 2025, but in the future. But just wanted to point that out. If you're looking at that retiree healthcare liability, you'll see a large jump in your funding. And that was 100% due to the fact that you made some benefit changes that really reduced the liability. So real positive there. And then I know we mentioned pension earlier, but your pension system continues to remain solidly funded at 80% funding. And so oftentimes, again, I get the question, well, what's the right number? And I always just, kind of remind people that from the state's perspective, if your pension system's under 60% funded, you're kind of on the radar and you have to file a corrective action plan with them. And if your retiree healthcare plan's under 40% funded, you also have to file that corrective action plan. So both of your plans are now more than the required kind of minimum funding based on the state. So with that was all the prepared comments we had, but certainly happy to address any questions you have or expand on any of the comments we made.
Council, I'll leave it up to you. Any questions?
I have a couple questions.
Sure.
Okay. Just because this is only my second year going through audit with this city, I was curious what percentage of the city departments' contracts and financial transactions were reviewed? Is it?
So we don't look at it from a percentage standpoint, so we
Okay.
do statistical sampling.
Okay.
And so when it comes to the expenditure side, we're actually looking at, we figure out what's the total population, and then we kind of use statistics to figure out, do we have to test 30, 40? So that's how we kind of figure out our testing approach on the expenditure side. So it's not necessarily a direct percentage, but in different areas, we're looking at that. So we kind of break the expenditures down into different categories. So payroll is tested separately than capital assets, for example, or other operating costs. So I can't give you an exact percentage, but I will say that we break it up by cycle. So we're looking at payroll as a cycle, capital assets as a cycle, accounts payable, operating costs as a cycle, employee benefits as a cycle. So we get our coverage in that manner.
Okay. And then I had a question, this comes directly from MML. I just want to read it to you under their audit section and then just kind of direct the question, see if you can answer it best as possible. It says, as a part of normal services of the auditor, tests of financial control should be conducted to assure adherence to laws and regulations. Such tests should also be designed to uncover weak systems which may provide opportunity for fraudulent behavior, including embezzlement. And I just wanted to ask you how you address that.
Sure. So when it comes to laws and regulations, there are, we certainly look at laws and regulations that directly impact the financial audit. So some examples are obviously in the state of Michigan, you're only allowed to invest in certain things under Public Act 20. So you can't, the city can't choose to invest general fund dollars in like Ford stock, right? You have to, there's a very limited number of investments you can get in kind of very safe stuff. So when we do our testing of your cash and investments, we're making sure that you're in compliance with the Public Act 20 of Michigan. We're also looking at some other requirements they have related to expenditures must be approved by council, and we're making sure that that's happening. And so we look at the laws that directly affect the financial audit, and then we do our tests on that. When it comes to the fraud related question, so one of the things we do during our audit planning is we as an audit team have to brainstorm on what fraud risks exist based on our understanding of the city and your internal controls, and then we design audit tests to make sure that we don't identify anything. And so one of the things that's always a risk, not just at Rockwood but everywhere, is management override of controls. Because if you have great controls but somebody's in a position to override them, they don't matter. And so we spend a lot of time looking at journal entries. So journal entries are kind of an override of a control because it's something that's being done outside of a check being written or a check being cashed. And so we spend a lot of time looking at that. And then also, cash is always a risk item. And so we design controls around looking at cash disbursements, wires, things like that. And so we do special tests throughout the year to make sure that anything that's coming out of your bank account is supported by either a check, a wire, and approvals and things like that. So we do different things, and every year we are required to do what we call surprise procedures around fraud. And that's just something that as a team we brainstorm and come up with where do we think there's a risk, and then we design tests to make sure that there's no issues there.
Okay, thank you. I think that was it for me. Thanks.
Okay.
Any other questions from council? We got about 5 minutes. No? Rick?
No.
Okay. I've been through it all.
Okay, great. Great.
Marcy, anything else?
All right.
Thank you
Thanks.
for coming and presenting. We appreciate it.
No problem.
And if
Thank
there's no
you.
more questions, we'll close out our workshop.
Sounds great.
Okay. Thank you.
Next time, don't talk to him.
Randy, if you want to give us 5. If anybody needs to use it.